Great. Okay, good afternoon, everyone. I'm Sanjiv Mota from BNK Securities. On behalf of BNK, I welcome you all to this very, very special session on thought leadership series that we have. We are very lucky to have Dr. Sanjiv Goenka, Chairman of RP Sanjiv Goenka Group. I don't have to introduce him. All of you know him extremely well. So, Goenka, thank you so much for spending time on this fireside chat.
Thank you, Sanjiv, for having me. I'm looking forward to it.
Yeah. So, Sanjiv, let me start with macro. Everybody, where I go, I visit outside investors or so on. Everybody's very bullish on India's story. And, recently you've talked about it as well. How, what are your thoughts and how are you playing this story? How are you thinking about this story?
First of all, let me say that I think what Prime Minister Modi has done to India and Indians is unparalleled. It's not only given the world a new confidence in India, a new respect for India, a new respect for Indians, but it's given all of us within India, every Indian, the confidence and belief that we can perform, we can deliver, we can compete, and we can emerge on top. And I think with that background, with that backdrop, opportunities are immense. I mean, literally any and every area that you look at, there are opportunities. And there are more opportunities. And in today's world, capital is not scarce. So literally, you just have to let your mind go and grow, and opportunities are there. As far as RPSG is concerned, I think we are poised to grow in all our businesses. But there is a shift. As I have been saying over the last few years, that from government intervention intensive businesses to consumer facing businesses. So that's one major shift. The second is to go green, more green, and even more green. So as a result of that, what does this mean in brass tacks? So simplistically put, we will expand our portfolio in PCBL, which will be on commodities as it is, which will be on specialities, which will be in chemicals, and which will be in a very green way. We will expand our power portfolio by adding 3 gigawatts of solar energy. And we are very seriously evaluating the prospects of setting up a hydrogen electrolyzer in the east coast of India or Oman. We are going to grow in our FMCG business, and we will grow aggressively. We will grow in a new space for us, which is pharma based on natural medicine and Ayurveda, which will be easy to consume. We will grow in music. We will grow actually in the content business and not just in music. So we will grow in our IT-enabled services business, and we will grow significantly there. So we are literally going to grow across all our portfolio in very, very significant way.
Right. That sounds exciting. So we'll come to each one of these, or at least few of these, which are at least relevant from stock market perspective, right? In the relatively near term, I would say. But let's just talk a bit about the journey from the group perspective. And you just said you've kind of put your roadmap down. One question I have here is, when I meet companies right now it seems B2B businesses like your PCBL are far more exciting than the B2C businesses. Is that right? Or, what is your take from where you are sitting?
B2C takes longer to take off than a B2B.
Right,
So I wouldn't categorize one as more exciting and one as less exciting. I think both are exciting.
right.
And both of them will grow aggressively,
Hmm.
and in fact, very aggressively.
Right. Hmm. Fair point. Coming to your management style, in fact, I think you are one of the most diverse groups, and you are a chairman, and you have, I think, created a pretty unique model. Not many companies you see like that, where you are chairman of the group, and then there are professional CEOs who are running each of this business. You've also mentioned, I think, somewhere I was listening to you, where that you have very robust reporting system, both on operation on new ideas. As a chairman, where do you kind of like, what is your management style? How are you looking at things?
So we frankly have very capable management team in each of our businesses, run by independent managing directors and CEOs, CFOs. Each one has its own HR head, which is backed by a corporate uh, operations review team, a corporate HR team, by a corporate finance team. Uh, and I sit in on reviews periodically. There are two kinds of reviews. One is on the operations. So typically for any company, you take 5, 6, at most 7 key issues for any quarter. And you identify these at the beginning of a quarter. And then you manage the performance on those metrics.
Right.
Then we have another review on special initiatives. So which again meets at the same frequency. And you're reviewing all the new initiatives that you've undertaken. So it could be operational, it could be strategic, it could be research oriented, whatever it might be. And so we are, I think the best way of describing us is family owned but professionally run. I don't have any relatives in business. I mean, there are no nephews, nieces, cousins who are either employed in the businesses or who have either agencies or anything. In fact, none of my relatives are allowed to walk into my office. They're free to come into my house at any point in time, but they're not welcome to my office. I mean, that's something I'm very clear about. And we believe in empowerment. So the CEOs have complete freedom to operate. And I think it's worked well. So this is a method that I intend to stick with.
Right. Well, yeah. So I guess the one question that kind of comes out many times in front of your role as a capital allocator. So, so one is, of course, being operationally reviewing these companies and so on, but then you get your own dividends from these companies. And in terms of how would you allocate capital, and I do want to bring out one past perception that was there in the stock markets, that CESC, for example, used to fund a lot of the ventures, which things have changed dramatically. You have now clearly earmarked these companies and so on. But maybe if you can talk a bit about that, and if there is any air of disbelief in people, maybe you can clear that. So
No, firstly, no business funds any other business. That is very clear. Okay, there's absolutely 100% clear. So what power has funded or what power will fund will only be power businesses.
right.
And unless, I mean, we've stuck to this policy, and I'm fundamentally a debt averse person. So at a group level, our total debt equity ratio is below 1:1. In the past, several years ago, 20, 25 years ago, we've been stung very badly by debts. And it was a very rude tough, cruel lesson that I learned. And it's made me debt averse for life. So I don't believe in debt. So if you see, most of the companies are long-term debt-free or almost long-term debt-free. So it's a very clear policy that I have. And we will not take money from one business to another business. That is another clear policy. If we have surplus cash, we will pay out higher dividends, which over the years we have been doing, but maybe that payout ratio may change even further. And as the largest shareholder in all these businesses, I certainly would root for change. But I think we have started adhering to very strong governance policies. We have started adhering to very strong ESG. We have started adhering to very strong principles. And I think everyone across the 50,000 employees in the group, everyone understands that and everyone follows that. So the values are strong and they're core to each one who is with us. So it's actually not difficult to implement at all.
Right. Coming to, you said family, but of course, you have a succession plan. You have, Shashwat and Avarnar. Now various parts of, are quite involved in some of the companies and so on. Where are, what's your thought on that? And, I know you're still very young, so maybe it's a bad question in some ways, but how are you thinking
I'm
about
not
it?
hanging up my boots anytime soon. That is again something I'd very clearly like to state. But Avarna runs Saregama along with Vikram. So she pretty much plays the role that I would play in the other companies, and that is of overseeing, but Vikram actually runs with the operations and implementation. And Shashwat at this point in time runs retail, FMCG, pharma. But over a period of time, he will succeed me. So that again is very clear. I don't think I have ever been ambiguous about it.
Right. Sure. So I guess let's move now to the companies. But before I just move there, one last question in terms of professional management. How are you getting them to get, I see that different companies have different style in terms of professional management skin in the game, right? In terms of their options and so on. What's the broad thought?
See, skin in the game is a tool for motivation. So in certain businesses, the nature of the business is such where you need to give ESOPs.
Right.
You need to give stock options. In certain businesses, it is about giving a variable pay, which is linked to performance. So you weigh it whichever way you can, but the senior management is incentivized to perform. And the better they perform, the better it is, of course, for the company and for them as well.
Right. Okay, point. Great. So let me move to my favorite company. I know you won't want to choose a favorite because, as you say, you are dispassionate, and every business is business for you. My favorite company in your group, not the largest, is PCBL. And I wanted to kind of get, I have a view. Maybe I am wrong, but the thing is, I feel it is not very cyclical, but the perception still in the at least investor community is quite a cyclical business. One, do you think it is cyclical, and what are you doing about it to make it less cyclical?
to the extent of the commodity business, there are cycles. But the cycles are not, they're very predictable in a way. And the peaks and the troughs are getting smaller. The gap between them is getting smaller. Having said that, so our attempt is to move on away or shift the proportion of commodity to specialty significantly. That's one. And two is to actually shift the needle towards getting into chemicals, which are very high value-added products and which are not prone to any cycles. So operational efficiency notwithstanding, this, and I can very safely say that today we are probably, if not the most, we are probably one of the most efficient producers in our space. We are the largest in India for sure, 7th largest in the world, and we are growing. And we are growing competitively after having earned the right to grow. And we will grow even more aggressively. But the shift is going to be that you grow less, relatively less on commodities and more on specialities, and then get into this bucket of chemicals.
Right. You've talked about chemicals in the past, and I just wanted to get, chemicals is a very broad term. And I think it's, in terms of how synergistic it is to your current business, how are you thinking about it? Is there a template? Is there a capital allocation thought in terms of how you're thinking? That'll be very useful, Sanjiv, if you can.
So again, we are guided by the broad principles in as much as we will not allow the debt equity of any individual. For the group, it is 1:1 as a whole. For any individual company, it is 1.5:1. And that applies even to power, which is generally a debt intensive kind of a business. Having said that, the idea is to look at acquisitions. We are evaluating some. Whether they will materialize or they will not materialize, we don't know. But we are looking at products and companies which are high in terms of value addition, which are niche in terms of product categorization, which have a value addition, which do not really necessarily have, they should have a technological barrier. Entry for somebody else should not be easy. So there are different kind of things that we are looking at, different filters that we are looking at. And we've been guided by McKinsey in this whole process. And there is a template, there are targets, and we are pursuing it.
Right.
But things may happen very soon. They may take a few months. We don't know.
Right.
These things are never very predictable.
Sure.
But yes, that is something that we will definitely get into, because, and at the end of the day, it has to be bottom line accretive and it has to be value accretive.
Right. So its cash flow from PCBL today is pretty decent. And, if it continues, it looks like the way it could continue there for next 2-3 years, even if it doesn't grow, there's a pretty high cash flow generation that the company can make. How are you thinking about it over the next 3, 4, 5 years? If I look at PCBL, what should it look like?
And I wouldn't like to give numbers specifically in terms of cash flows. Of course, all analysts would have done their own estimates. But all I can say is it looks very strong. It looks very robust. And so there's going to be enough capital going forward. If you look at the next 3 to 4 years, I think you're going to see huge amounts of internal accruals coming in. We've just finished our commissioning our new plant in Tamil Nadu, which is 147,000 tons.
Yeah.
Full plant is commissioned now. And for the month of September, we were at break even within a few months of starting the plant. And that is reflective of the fact that our consumers prefer our product. They're happy dealing with us. There are long-term relationships, and we are their most preferred supplier. And so orders are coming in thick and fast. And the second phase was actually just commissioned less than 4 weeks ago. And now for the whole plant, we are already at a break even. So we'll get very strong cash flows going forward, even this year, even next year, even the year after, and so on. And cash flows will only keep increasing. We also have the ability to add another brownfield capacity of 90,000 tons at our Tamil Nadu location.
Right.
We've just done 20,000 out of 40,000 tons at Mundra, which is brownfield. We can do another 30,000 tons there. So those are actually relatively lower cost investments, and therefore they will yield better return. For our Tamil Nadu plant, the tax rate is 17.2%. So that gives us an automatic advantage in terms of earnings. And we are also looking at, we've patented something called oxidized carbon black. So this will, the process is patented, the product is patented, trials have been approved by customers. And this is a very high value addition item. So we hope to sell somewhere between 7,000 to 8,000 tons a year. And the contributions would be, I would anticipate, at least 5 times our current contributions.
Right.
So that in itself gives another very big contribution, stroke profits, stroke cash flows, call it whatever you might.
Sure.
So there are lots of things happening. And we're looking at something that I'm very excited about, and that's in the EV battery space. I don't want to say much about it, but we are actually quite advanced in that space. So that's another thing that the market seems huge.
Right.
And hopefully soon we would be, hopefully soon there should be some good news on that front.
Right. So PCBL does sound pretty exciting in terms of, and in terms of you also have a team in Belgium, right? If I'm not wrong, where
so we have 2 R&D setups, Sanjiv. One is in Palej in Gujarat, one is in Belgium.
Right.
And between them, we have actually patented several products, and there are actually 20, call it molecules, call it products or whatever, which has been unearthed or developed by this cell. So I think it's something that we started, we were late in the game, but we're catching up. And oxidized carbon black has actually come from the oxidized carbon, not carbon black. The oxidized carbon is something that's come from our own R&D efforts. And there will be more. So I think it's something that just begun. There is emphasis on it. We are getting very high quality scientists and technicians. And so we not only look at developing a product, but we also look at the process. And so we will patent not only the product, but also the process.
Sure. We also hear, and this seems more tactical, which is that there seems to be an opportunity because Russia, there are, finally Europe is putting ban on Russian carbon black, which is a large producer themselves. Do you see that as an opportunity, Sanjeev, or what are you hearing from your people?
At the end of the day, these kind of things give you short-term opportunities.
Right.
And it helps you to facilitate, if you've set up new capacities, they sort of tend to get stabilized and utilized faster.
Right.
But eventually, it's a market dynamics.
Right.
And you have to earn the right to grow. You have to be competitive. Your process has to be right. Your costs have to be right. Your procurement has to be right. I mean, there is no shortcut to that.
Right. And overall competitive intensity in carbon black at this point, you would say, is lower than what it used to be, or where where would you put that?
In competition as intense as it was, in fact, it's actually more. But I think because of our competitiveness,
Right.
we are earning the right to increase our market share regularly, which we are doing.
Right. Right. So, see, my prognosis that PCBL is the most exciting company in the group. Would you kind of agree with that, or?
Ah, PCBL is very exciting, but others are as very exciting as PCBL. So I'm not saying this is the most exciting, but yes, it is very exciting for sure.
Right. I was trying my luck. So, okay, let's move to maybe Firstsource. Uh, unless you anything else that I missed out on PCBL that you want to kind of highlight.
I think you've really covered everything, but fundamentally, I think all that I can say is that we have very low leverage. Our net debt is well below 500 crores as we stand. Cash flows are going to be high, and our debt equity policies are very, very strong. So I think we are on a very strong footing.
Right. Right. Wait, so let's move to Firstsource, and I guess we have recently seen a change in management there, and I'll come to that. But before that, Sanjeev, just a bit on the macro. As market participants, we are quite confused, very frankly, on the role of generative AI and what it can do to the Indian IT sector. Uh, I'm just wondering if you have any thoughts and you want to, maybe you can throw some light on us on in terms of how do you see this?
AI is something that I think none of us really understand completely, and we don't know what shape and form it's going to take. So a certain amount of confusion is natural. Now, having said that, how do we see AI impacting our business today, and what are we doing to adapt to that and take advantage of AI? Okay, so we launched a Firstsource AI last quarter. So that's just
Right.
that's like a not exactly a division, but that's a part of an initiative. So we believe immediately it will have kind of three kinds of impact. One is automation. So giving, for example, you give a human task to software. For example, for things like call summaries at the end of every interaction.
Right.
So it's very simple. We believe this can impact us hugely positively. Augmentation, where AI will act as a co-pilot to assist the human in the loop to provide a superior experience. And acceleration, where AI can be used to have more personal interactions, predictive next service offerings, and thereby again give the customer a better experience. So this is where we believe we can immediately apply AI in our business to our advantage.
Right. So the way I'm hearing is you think AI probably will end up net being a positive over a longer period. Is that how I should see it?
Yes, definitely. Technology is always a positive. It depends upon how you use it. So, what is AI? It is, at the end of the day, it is something that is churning the data, analyzing the data, and predicting the data for you much faster than any human can do. So if you can use it well, it's brilliant.
Right. But in a BPM or a BPU kind of setup, does it also mean that there could be, some people could become redundant, or like how?
At the end of the day, if it becomes a tool to save costs, that's even wonderful.
Right.
So for the BPM space, it can only be an advantage as it stands, unless there is something else that is more disruptive
Right.
and proves to be a disadvantage going forward.
Sure. So let me just again give you a perception about Firstsource, and then I want your first. The perception generally has been BPM company, hence should not have that kind of valuation. That's one. Second, very dependent on mortgage, and hence can be quite cyclical. So how are you? Again, how do you look at it, and how are you changing that, if at all, if that's true?
So yes, we 2-3 years ago we bet heavily on mortgages, and mortgages tanked, and that's why we had a dip in our performance, and we had huge losses on the mortgages front, led by the US market and the rising interest rates there. But I'm happy to say that the mortgages market, or the slump in the market, has bottomed out, it appears. And last month was probably the first month of a break even in the mortgages business after a huge gap.
Right.
Otherwise, mortgages as a vertical was bleeding badly. Now, let me just give you very simplistically what is it that we are doing to actually take Firstsource to a high growth, high profitability, high margin kind of business. Now, there are four principal verticals as it stands: banking and financial services, the CMT, that's commercial media and technology, healthcare, which is healthcare payer and provider, and then you have the diversified, which is energy, utility, and tech mortgages. So that's the portfolio. One, our onshore to offshore delivery model is skewed. Now, the intention is to change it. And we've made a beginning with Sky, which is our biggest account. And let me just illustrate. 1% reduction in onshore to offshore. Okay, let me put it differently. Margins for offshore are 35%. Margins for onshore are roughly 10%.
Right.
We are at about 70-30. We made a beginning with Sky, with 1,000 FTEs have shifted to India. This is something that we will take across all our clients and across everything. So there is a huge saving there. The second simple unlock for us is attrition. We do believe that we can get at least 20% reduction in attrition over the next 12 to 15 months. That is something that the management team and the board is completely aligned on. 1% reduction in attrition in onshore is $1 million. 1% reduction in attrition in offshore is $0.3 million. So we do believe there is again a huge potential. So just shifting the onshore offshore ratio and the attrition rates actually give us a huge unlock in terms of bottom line. And we don't have to do that much. The second, or the third rather, is of our 29 top clients, 19 are in the Fortune 500 or FTSE top 100, etc., etc., etc. We have, with the exception of a couple, we have 1.5% wallet share in each of these. One should typically be at minimum of 10%. The important thing for us is that we have an entry in them. Now it shouldn't be that difficult. Getting an entry is the most difficult part. Having got the entry, to increase the wallet share should be easier. So if you get to 10% wallet share, that is again a huge amount of unlock. So these are very simple Banya economics or policies or principles or tactics to be applied to a very new age business. And this in itself takes the profitability to a different level. Then you don't have the losses from mortgages, hopefully, if the break even last month is an indication. So you're saving the losses of the past from mortgages. So that automatically goes as a positive in the bottom line. Then, of course, is to grow the businesses, to get into more value-added services, to use AI as a tool for growth. So all these put together certainly gives us a fairly strong roadmap in terms of increasing profitability hugely forward over the next 4 to 5 years, say by 28.
Right. We recently had a new CEO join. I think Ritesh has come in and very strong credentials. What, when you sat with him and look at next 3 to 5 years, I'm not asking for guidance, but what kind of targets, if you can share anything that you guys have talked about?
It would be inappropriate for me to share numbers, but yes, we discussed very aggressive numbers, and he spent a lot of time analyzing, understanding, absorbing, evaluating, and then a significant part of his variable pay is linked on a certain number being achieved by 2028. And if that number is achieved, which I'm confident it will be, I think it would be very good for Firstsource and all its investors and its promoters.
Right. So you think then Firstsource will clearly become the #1 market cap company in the group, if that happens?
Yeah, you're asking me to rank. I mean, I'm not saying anything like this, but yes, I do believe that Firstsource has a huge potential for market cap to increase.
Right.
And you will see the changes that are being brought about in the company.
Right.
Here again, we are using McKinsey to help us chart the path forward. And they've been doing a great job. And I think it's something that the whole management team is buying into. So yes, we've had pain over the last few quarters, but hopefully that is behind us now.
Sanjiv, software has not been a traditional business for you guys. You bought it relatively recently. I remember Firstsource used to be, I think ICICI run company and so on. Went into trouble and you guys bought it out. is this something that you think that, and I know you've been asked this question 100 times, and maybe I'll ask it 101 time. If FY28 you achieve this, what you would then say, okay, I'm out of it, or you think this is something that you want to keep it,
No, 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 no. We're not getting out of it.
right?
We are going to stay in it because I believe by 28 we will get to the first. So far, what we've achieved with Firstsource, when we bought it, it was effectively a loss-making company.
Yeah.
We brought it to a level of certain profitability, but it's not where we would like it to be. Now, the issue is to actually get to higher gross margins, to get to higher profitability, to get to higher revenue growth, which is all possible. Then you have to get on to the next phase of growth. And I think the potential is just mind-boggling. And I'm not letting go of this potential as soon as 28, or for that matter, anytime soon.
Right. That's great. In fact, I maybe want to share an anecdote. I used to run a fund which used to own a convertible bond of Firstsource before you bought it, and we thought we'll never get paid, and then you came in. So we'll always remember that guys saved us from a pretty big loss. So I hope this you can take it to a next level.
This is something that we evaluated. It was a new area for us.
Right.
But with Firstsource, we got this team, this magnificent team of very strong professionals who are capable of delivering. They just have to be motivated. And we are finding it fairly easy to attract talent. And Ritesh is a prime point. And when we were looking out, so we chose Ritesh because he, to my mind, came out as the best amongst the whole lot. But there were several candidates who were very, very highly skilled and capable with relevant experience base. So I think there is excitement in the job world, so to say, about the potential of this company. And I don't believe we are anywhere near realizing the full potential. We're just about beginning the journey.
Right. Great. So maybe I can move on to the next one, which is CESC. But again, anything else that you want to add on Firstsource that we may have missed out?
Well, there is so much. I mean, I can go on and on from the healthcare part and how we are going to cross-sell mortgages to Lloyd's, TSB's, and Barclays clients. How we've made an entry into utilities through Aeon, and how we are going to take that forward. How we can cross-leverage our skills and our offerings across different clients. So I can go on and on and on, and there is a very detailed, exhaustive list. But you had said it should be more strategic, and therefore I'm confining myself to the strategic part of the whole thing.
Yeah, no, I guess I would love to have a separate one just on individual companies. Since we have limited time, I thought I would want to bring out all the exciting stuff that's happening in the group in that one chat. So CESC, now again, perception, a dividend, it's just a dividend stock, it's gone X growth. Other than maybe some stuff that you guys are doing on distribution. Now you've talked about renewable, but how yeah, and the company keeps throwing fabulous cash, right? So how are you now looking at this?
Well, I think for a while we had gone into a kind of a pause button on growth. So it became more of a dividend stock. But I think what you will see increasingly is a dividend stock with a story of growth. So 3 gigawatts of solar power, which is actually backed by our own distribution. And we hope bulk of it will go into our own distribution. So it makes our distribution business completely green. It gives us a natural market. I mean, the market for green power anyway is very robust, and but this gives us an automatic natural value addition because we will supply it to the end consumer,
right,
as opposed to going to the grid or the exchange or whatever it is. The whole area of this hydrogen electrolyzer seems very, very exciting. It was very early for us, so no, we haven't frozen on the technology, we haven't frozen on our partners, but that's something that we are beginning to look at now very, very seriously. And we do believe there is significant potential in this whole area. So I think we will grow in distribution like we have grown, hopefully more aggressively. We will grow in generation for the immediate future with 3 gigawatts of capacity in solar. We've already begun acquiring land in Rajasthan, and we are acquiring parcels of land. We have applied to the UP government for land in UP, and those discussions are on. So I think it's moving fast. And the gestation period to set up solar is actually fairly low. So it shouldn't take that much of time to set these up. And all this is keeping in mind the overall debt equity guidance.
right,
We will not exceed that guidance.
right. But you could potentially form a subsidiary where you could raise equity, right? Because green, if you're doing hydrogen, if you're doing all these renewables, that could be an option, right? That you could look
Yes,
at.
of course. Yes, of course. And that is certainly a way to look at it because everything cannot be financed by equity, neither can everything be financed by debt. That's not the way we would want it. So it would have to be by raising capital, possibly in a subsidiary. That structuring is still not done.
Sure.
And I think we are early in this journey, but hopefully in the next 3 to 4 months, we should be there in terms of having the full structure and plan ready.
Right. So CESC basically, but one thing that you've stated very clearly that you're not going to expand thermal. That is very clear, right?
Yeah, absolutely.
Right.
And in fact, going forward, at least 70% of the power we distribute will come from renewables.
Right.
I'd ideally like to go to 100%, but we still have thermal capacity, which is efficient, which is cash and profit accretive, and still has some time to go before we retire them. So it'll be a phased process. Right. But we've already begun. So, for example, recently we floated a tender for 300 megawatts of green power and long term. And we tied that up. And you'll see more and more of this as we go forward.
Right. So anything else that one should kind of be aware of on CESC that, how we're looking at, or we've obviously talked about this growth potential?
Again, this is an area where we are using AI to enhance customer experience. There is a lot of work happening on the ESG front. So, for example, we've actually developed a technology for utilization of the bottom fly ash, which has been very successfully implemented, and we've got it's patented and so on and so forth. But more importantly, it's about actually driving down costs to remain competitive. It's about getting to a situation where you become masters of your own destiny and you don't allow somebody else to govern your destiny. It's about actually using more and more smart meters. It's about using more and more environmentally friendly techniques So it's about actually greening. So, for example, our newest thermal power plant, which was Haldia in West Bengal, it actually has a huge amount of herbs which are grown for medicinal purposes and supplied.
Mm.
We have a butterfly park there. So it's actually quite beautiful. So it's about doing lots of things which are right from an environmental perspective, which is right from a competitive perspective, which is right from a cost perspective. Today morning, we were doing a review on how we can drive, which area of Calcutta there are 3 or 4 pockets where there are higher T&D losses. And how do the rest is much better, and that drags up the T&D loss number. So how do we tackle each of those areas?
Right.
And what do we need to do? So every area becomes as efficient as the other. And how do we benchmark ourselves against our own best? So we have 10 districts, for example, in Calcutta. And that's the way it's mapped out from
Right.
a power distribution perspective. So whereas overall, all of them are efficient. Some of them are more efficient than the others. So what do we need to do to get the others up to the same level of efficiency as the best? So you look at the best in class internally, in addition to looking at the best in class. So you compare Tatas, you compare Adani, you compare Torrent, and let's take the best practices from each one.
Mm.
And you collate them, and that itself becomes like a huge exercise and a huge potential for competitiveness.
Right. So you think some of these efficiency measures can actually improve bottom line for CSC, or
Bottom lines for regulated entities is regulated.
right?
So we have to see how we improve the consolidated bottom line.
Sure.
So it's by adding more distribution zones.
Sure.
It's by adding more solar capacity. It's by thinking of more innovative means of having value additions.
Right.
And all this combined would certainly lead to a significant increase in consolidated numbers.
Right.
And
Sure.
all of which are all the power initiatives are under CESC. So they're subsidiaries of CESC.
Right. Great. So I guess we just have 5 minutes, so I'll spend some time on Saregama, which as a music lover is a passion. I love that stock anyway. But point is, a lot of stuff has happened, and you guys have done a lot of great things over the last 3-4 years. I think I remember even going to the Dum Dum factory, and it was quite a dead. At one point of time, it was quite a dead company, and since then, I have seen the change, and it's been fabulous. You've participated in this whole streaming and so on. Where now, you guys have been doing a lot of interesting content also on OTT. Music is one area, and you've just done this acquisition. So if I look at this company 3 to 5 years, like how are you looking at this company?
So one is to actually connect more and more with the youth, and to control content even more and more. So for the longest period, we were absent from new Hindi films, new Telugu films, regional music, this whole gamut of new music. So whereas we had a monopoly over retro music,
Yeah.
say for a period from about 2003-4 to 2017-18, we were absent from the new Hindi film market and the new music market. And we are back with a bang. So we have all the major studios with us. So Zara Hatke Zara Bachke is Dinu Vijan. Rocky Rani Ki Prem Kahani is Karan Johar. One of the biggest hits of recent times, Jholida, is from Sanjay Leela Bhansali. So you have Bansali, you have Karan Johar, you have Dinovijan. So these are the three biggest banners in terms of music. We've got into regional music in a big way. So we have a very strong presence in Telugu music. We have a presence in Tamil. We have a presence in Malayali. We have a presence in Kannada. We are very strong on Bhojpuri music. We are strong on Gujarati, Marathi music. Punjabi, we are making a strong go. We are now getting into managing artists. So we manage 11 artists already. And these are artists who actually potentially will churn out more and more hits. Diljit Dosanjh is somebody we've nurtured, groomed. I mean, he's one of the most amazing talents that we as a country have. There are so many. And the whole idea is to connect more and more and more with the youth, youthify our catalog. So if you see Rocky or Rani Ki Prem Kahani, it's built on retro music.
That's right.
What Jhumka actually youthifies Jhumka Girare.
That's right.
So it's about actually getting retro music cool. And it is with that in mind that we acquired Pocket Aces. Pocket Aces has a direct connect digitally with 95 million youth. Now, that is huge.
Mm.
Now, this gives us a ready market to access this 95 million youth with our content. One, they create a huge number of videos and produce it on and put it on the digital media. So it gives us control over that content. One of the big, call it series, call it serial, on the digital media is produced by Pocket Aces. Pocket Aces manages 123 influencers. So we manage, as in Saregama manages 11 singers, they manage 123 influencers. Now, so it's about synergizing, it's about getting into the space of content. It's about getting into creation of content. It's about getting into distribution of content. And this is where the digital world helps us.
Right.
So Pocket Aces becomes a natural ally for us. It gives us direct access to 95 million youth consumers. It gives us access to 123 influencers. It gives us access to a lot of content which they keep creating on a weekly basis. And you can only grow it from here. So I think the potential is quite huge. I haven't personally met the team, but Vikram tells me that it's a team of about 24, 25-year-olds who are supercharged and super enthusiastic and very highly capable of doing what they're doing.
And so they will continue to be in the business, right?
Of course. And the managing director is committed to be there for at least the next 2 years.
Okay. So one point in Saregama, which I always bothers me in any content company, that you can always end up overpaying a bit because there's always hindsight that we know that something is a hit or not. How do you manage risk?
You know, who's to say what is right and what is wrong? At the end of the day, if Rocky or Rani Ki Prem Kahani is a hit, which it has been and been brilliant from our perspective, or Zara Hatke, Zara Bachke is a hit, which it has been and hugely so, then what you've paid for it seems low. So, and this is a game which is, you will not get all hits, but if you get 6, 7 out of 10 as successful, the overall portfolio becomes hugely successful. It's pretty much like a mutual fund.
Right.
So you research on equities, you invest in equities every equity will not give you the same kind of return.
Hmm.
So also every music will not give you the same kind of return,
Right.
but it is based on the same kind of research, on the same kind of analysis, on the film producer, director, script writer, music director, singers, actors, the track record. There's a whole heap of research that goes into it,
Sure.
and then it's finalized.
Sanjay, I can go on talking about all your companies. I think, as I said, all of them are looking so exciting. We haven't even come to the consumer side yet. So we'll hopefully redo this conversation one of these days to discuss some of the other names. But thank you so much for spending time. I think it was really great.
Thank you for hosting me, Sanjiv. Appreciate it. Thank you so much.
Thanks. I have to stop the recording.